Fed Chair Powell signaling today the central bank may be considering taking a less restrictive stance, saying that staying higher for too long could, quote, unduly weaken the economic activity. Joining me now is Evercore founder and senior chairman, former Deputy Treasury Secretary Roger Altman. That was quite an intro we had for you, Roger.
Hey,
it's
Scott,
good to have you back.
I appreciate any intro.
All right. Fair enough. What did you take from the Fed chair today? Did he set the table for later this year?
I think the answer is yes. In particular, because for the first time, at least with emphasis, he talked about the two-sided risks, namely that it's now at least roughly equally balanced in terms of the risk that the Fed waits too long to ease and that the economy gets weaker than anybody would want, versus continuing to be restrictive and the economy becoming too strong and despite it. So I think that signals that the Fed is now turning, and the market, as you know, is pricing in 2 rate cuts. The first one likely in September. Of course, that's data dependent. We need to see, as Powell said, continued progress on inflation. Thursday CPI number will be the next metric that's relevant. But I think the market's probably right in terms of what it's pricing in. And you can see that in open market interest rates, which are now ticking lower than they have. The 10-year is just right now a little below 430. So we have the soft landing right in front of us that we all talked about for so many months.
So you think that the market's got it right? 2 cuts sounds good to you, despite the fact we have an election coming up. We're obviously creeping higher to that. Fed chair was asked about it at least a couple of times today. It was on one side of the aisle, as you would probably expect that to be, where that conversation would be dictated. But you think 2 is good?
Well, Powell did say that inflation has to cooperate in the context of that expectation. So PCE, as you know, if you annualize the most recent month, is running below 3% already. So as long as the next set of inflation data continues to indicate progress on inflation, yes, I think 2 cuts is right.
I mean, I know that the Fed chair is never going to come out and declare victory in the purest, most direct way. Do you think they can, though? Here's what he said today. This is no longer an overheated economy, so you can check that box, right? They've handled that. The labor market's back in balance, right? You got to talk about the other side of the mandate, which not a lot of focus has been on over the last 18 months. You check that. The likely direction is that we begin to loosen policy. That means that they believe that they're going to win on inflation, too. Can they declare victory yet?
Well, as you know very well, Scott, the Fed is never going to actually declare victory in the literal sense of that. But look, if they pull this off, and they're on track to do so in terms of achieving a soft landing, it's quite an amazing accomplishment, and the Fed will deserve a lot of credit, particularly since they missed it at the very beginning when they waited too long to begin to tighten in the face of what became stubbornly high inflation. So there won't be an actual declaration of victory, but I think it will be implicit based on the path we're on, yes.
What's this mean for the markets over the remainder of this year, Roger? Is your business, is M&A going to pick up? Are you going to be much more busy than you guys have been over the last 18 months?
First of all, I don't know how you get a better macroeconomic and global financial market environment, or at least U.S. financial market environment, than we have right now. I mean, growth is slowed a bit, as you've talked about all day, but it's still steady. Corporate profit outlook is good. Inflation is trending slowly down. Prospect for a rate cut is pretty imminent. And that's why equities, including today, continue to make new highs, and open market interest rates are falling. So it's just a very positive market environment overall. In terms of M&A levels have been improving so far this year. Dollar volume is up, although the number of transactions itself year over year is down. Gradual, steady improvement. I'm not sure whether the second half is going to continue that, although probably it will. So that transaction market is healing, so to speak.